Ladies and gentlemen, good day and welcome to 3i Infotech Q2 FY’25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prateek Chakdap from EY Investor Relations. Thank you, and over to you, sir.
Thank you, Tanmaya. Good afternoon to all of you. Welcome to the Q2 FY’25 earnings call of 3i Infotech Ltd. The results and investor presentation have already been mailed to you, and you can also view it on our website at www.3iinfotech.com. To take us through the results today and to answer your questions, we have the top management of 3i Infotech Ltd. represented by Raj Ahuja, Acting CEO. Raj will start the call with the business update. After that, we will open the floor for Q&A session. As usual, I would like to remind you that anything said on this call that reflects any outlook for the future or which can be construed as a forward-looking statement must be viewed in conjunction with the risks and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual reports that you can find it on our website. With this, I will now hand over the call to the Raj. Over to you, Raj.
Thank you, Prateek. Hello, good day to everybody. Thank you for taking the time to join us today to discuss the financial results for Q2 FY’25. It's my privilege to address you all today for the first time on the earnings call as the Acting Chief Executive Officer of 3i Infotech. I bring over 30 years of experience in finance, strategy and operations across technology, media, FMCG, banks, financial services. My focus here is to drive strategic growth, operational excellence and compliance, leveraging my experience from companies like Yes Bank, Paytm, Reliance Jio and Wipro. Over the past few months, I have focused on understanding our business strengths, the unique value we bring to our clients and the significant opportunities we have in our markets. We are in an era marked by rapid technology advancement where adaptability and innovations are essential for our ongoing success. My vision for 3i Infotech is straightforward: to establish our company as a proactive player in this evolution, leading in digital transformation and innovation while remaining true to our core strengths. I'm committed to building on the solid foundation laid by this team, and I look forward to cultivating a culture of innovation and growth as we move ahead. Currently, we are going through the transformation phase, which is built on 3 foundation pillars: compliance, profitability, and sustainability. These pillars go beyond strategic objectives. They reflect our commitment to rebuild the company with integrity, financial stability, and long-term value creation. Over the past year, 3i Infotech has undertaken a strategic realignment to stay competitive in the rapidly changing market. This effort focused on refining the company's core strengths, optimizing resources, and preparing for future demands. While we maintain our strong presence in the BFSI and the government sector, we are expanding into high-growth areas such as healthcare, manufacturing, and telecommunications also. Additionally, we have taken significant measures to improve operational efficiency and cut non-essential costs, positioning us for resilience, adaptability, and operational excellence. Coming to Q2 FY’25 results, I will start with a summary of quarterly results, followed by an update on business events and outlook. This quarter, our revenue stood at 177.6 crore rupees, while gross margin was 20.3 crore rupees versus 16.9 crore in Q2 FY’24, which is a testament to our cost optimization efforts. Our operating EBITDA was at rupees 5.5 crore, a growth of 55% quarter-on-quarter, continuing positive trajectory from Q1 FY’25. During the quarter, our net loss narrowed to rupees 1.2 crore as compared to loss of 6.1 crore last quarter. Our current focus is on sustaining our scale and driving organic growth within existing accounts. Alongside this, we are revamping our sales strategy and structure to expand our reach and drive growth in new accounts. During the quarter, we have signed 23 new contracts with both existing and new customers. This includes addition of 4 new clients in government and manufacturing sector and accelerated our shift to next-gen solutions through AI investments, initiatives that position us for sustained growth in FY'25 and 26. Coming to some of the quick business updates. As previously communicated through stock exchanges, we had received in principle board approval to divest partially or fully from the rail project, as it was a non-core B2C venture that would have required substantial investment and resources. We have since signed a non-binding term sheet with investors and will provide further details upon signing the definitive agreement, which we intend to close within this quarter. Additionally, we have reprioritized our future tech product portfolio, focusing on selected set of products for the next 6 to 12 months, with plans to divest or close the remaining products. To further strengthen our leadership, we have recently restructured our management framework, and we are in the process of appointing some key management personnel this quarter. In terms of balance sheet update, we have effectively reduced our receivables by maintaining a strong focus on collection cycles and implementing rigorous follow-ups in the market. This will continue to be a priority area under direct management oversight. Furthermore, we have made appropriate provisions for legacy issues that may emerge following the completion of the audits. An update on forensic audit. So currently it is in its final stages, and we expect completion by Q3 FY'25. Looking ahead, this year we anticipate a decline in top line primarily due to our strategic decision to exit some low margin and loss-making deals. However, as our growth initiative gain traction, we expect to see positive momentum by year-end, with fair growth projected to begin in FY'26. Our EBITDA has already turned positive this year, and we expect this upward trend to continue, with a target for exit positive EBITDA, PBT for FY'25. With this, I would like to stop here. Thank you for your continued support and trust. I will now hand over the floor to moderator for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harish Tawate, who is an individual investor. Please go ahead.
आज जी, आपकी कंपनी एक आईटी कंपनी होते हुए भी आप एक अनरिलेटेड और नॉन कोर बिजनेस जैसे कि आरटीए का काम क्यों कर रहे हैं? अगर आप चाहें तो इसे आउटसोर्सिंग भी तो कर सकते हैं ना? Question number 2.
Harish sir, may we request you to please speak a little loudly since you are not audible?
ठीक है। राज जी, अगर आपकी कंपनी एक आईटी कंपनी होते हुए भी आप एक अनरिलेटेड और नॉन कोर बिजनेस जैसे कि आरटीए का काम क्यों कर रहे हैं? अगर आप चाहें तो इसे आउटसोर्सिंग भी तो कर सकते हैं ना? क्वेश्चन नंबर 2. अगर कंपनी का ग्रॉस प्रॉफिट मार्जिन 20 to 30% के रेंज में नहीं आ रहा है, तो फिर कंपनी का नेट प्रॉफिट मार्जिन 10 to 20% के रेंज में कैसे आ सकता है? तो फिर क्या मैं इसका मतलब यह समझूं कि कंपनी के पास प्राइसिंग पावर बिल्कुल भी नहीं है? क्वेश्चन नंबर 3. अगर आप अपकमिंग गाइडेंस देने में हिचकिचाहट रहे हो तो फिर क्या यह समझा जाए कि आपका कंपनी की ग्रोथ को लेकर सेल्फ कॉन्फिडेंस कम है? क्योंकि कंपनी के फंडामेंटल की वजह से और आपकी कंपनी को ग्रोथ को लेकर गाइडेंस न देने के कारण शेयर प्राइस में गिरावट का माहौल बना चुका है और आज के तारीख में शेयर प्राइस ऑल टाइम लो के आसपास है। क्वेश्चन नंबर 4 और ने आपको एज ए सीईओ के तौर पर नियुक्त किया। उसके बाद आपने Q1 FY’25 और Q1 और Q2 FY’25 में EBITDA पॉजिटिव अनाउंस किया। फिर भी मार्केट ने आपको चेयर अप नहीं किया, तो फिर क्या मैं इसका मतलब यह समझूं कि मार्केट को राज्य का लीडरशिप पसंद नहीं आया? और लास्ट क्वेश्चन नंबर 5, जिस तरह से आपने प्रीवियस मैनेजमेंट में जो कुछ भी चेंजेस किए थे, जैसे कि CMO, CEO, CFO, स्टैट्यूटरी ऑडिटर्स, ठीक उसी तरह से क्या आप आने वाले दिनों में CFO और कंपनी सेक्रेटरी और इंटरनल ऑडिटर, मतलब के ट्रेडर्स एंड एसोसिएट्स, इन दोनों को भी चेंज करेंगे? दैट्स ऑल फॉर माय साइड।
Okay. Thank you, Harish ji. Quite good questions, and I'd like to think about how do I answer some of these questions, difficult questions. Let me go question by question. First question was on our RTA business. RTA business, we actually had set up as a start of this company as a RTA company only, and that business has continued for the last so many years. Actually, we have no plans to get away from this business, because this business is part of our BPO services businesses, BPO and KPO, which we normally give to our clients. RTA is sort of a KPO for the share transfer activities. It's a good profitable business with a good margin as of now. We have not shared separate numbers for this business, but this is a good profitable business for us, adding almost like 4 crore to our contribution margins. We actually have, with the recent changes in the stock exchanges guidelines, we actually have a lot of growth prospects for this particular business, and we really want to do investments in this business with our approach to a lot of professional associations which manages the client's RTA business. We are working on improving and upgrading our RTA platform. We are working on a GTM strategy, and we actually want to play a very active role in RTA. We see this as a subsection of our BPO business, and we continue to develop on this line because it's a good growing regulated and profitable business for all of us. Second question was on the gross margin. The gross margin percentage will continue to go up in the next few quarters because we have taken a call of setting up our pricing strategies in such a fashion that we get into a gross margin of 20% plus over the next 2 quarters. We have exited some low margin deals, some negative deals, and which is visible that despite degrowth as compared to the last year in our revenue top line, our profitability has increased, EBITDA has increased, our losses at PBT level has come down, mainly because of the fact that we have decided to improve on our gross margin by exiting non-performing deals. If we are at this point of time, my short-term objective is to cross 20% gross margin. So obviously, if gross margin is 20%, we can't cross net profit of 20%. So I don't want to give a guidance at this stage, but obviously this will be lower than 20% margins. But we'll surely in quarter 3 and quarter 4 we are targeting net profit to start moving towards the positive zone, which is currently at negative levels. Question number 3 on the upcoming guidance, missing confidence, our share drops. Share market, I think, is obviously we know it's volatile market nowadays because of so many factors in the international space, whether it's the war situation at 2 places or whether it is the US elections and so many other things happening across the globe. And the markets are very, very volatile, and as a part of it, the mid and small cap markets are also taking a lot of beating, and so is our share price. If you've seen our post the declaration of the results, our actually stock is up to I think around 29-30 levels today, and very frankly, we have no role to play, and we don't want to play any role in the share price. I think the market should determine based on our performance whatever is the right value and award us with that value. Our focus is continue to work on improving the performance on quarter-on-quarter basis. I have not given any upcoming quarters guidance as of now, mainly because I just came in and this is my first quarter and this is my first interaction with this group, and I need some more time to start working on giving a proper guidance. As of now, the guidance which I have given earlier through the AGM as well as through this today's call and our press releases, that we are expecting this revenue trend to continue for the next 2 quarters. We are not going to degrow further from this level, neither we are going to be very, very aggressive in the sales pipeline because we are readjusting our sales strategy at this stage. By building up the complete GTM strategy afresh, by getting good senior leaders in that space, and redefining our geography strategies, product strategy. So this will take us around 1 or 2 quarters more to stabilize everything. And till then, we are holding fort on the existing business what we are having. And we continue to grow a little bit. Like we have added 4 new clients this quarter. We have added 23 new contracts this quarter. So this trajectory will continue, but my guidance is don't expect miracle for the next 2 quarters as far as the top line is concerned. So we will continue to be growing slowly and steadily from here onwards. Question 4 about my joining and market reacting to my joining not so positively. I think share markets and everywhere else, the investors look at the performance and not at individuals. I don't think that since I've come, the share price will react positively and share for me. I think they will like to wait for 2-3 quarters and they will see whether I'm able to deliver performance or not, and then I'm sure the share markets will react according to the performance. I'm not expecting either a positive pat on my back or the negative till I am able to prove that the performance can be sustained. On the last question on the CXO changes, there were some CXO changes which was done in the previous quarters, which was part of the whole repositioning and reshuffling of the management team because of the performances, especially in the last 4 to 6 quarters. And the board obviously has taken the calls what they felt was good for the progress of the company. We have no plans, and other than the top management which had gone in quarter 4 and quarter 1 beginning. Other than that, we have not induced any exits from the company, any CXOs from the company. They were all part and parcel of the original management leaving us, and including the CFO who left us of his own for his own personal choices and not we have exited him. And similarly, we have no plan as of now to replace any other senior management or any other auditors. We have already replaced our auditors who have resigned of their own because of the pressures what we had on cost optimization, and we had wanted some kind of a reschedulement of fees which they were charging us, and they have shown their not so much of eagerness to drop the cost. We had to change our auditors. But we are not going to compromise on the quality what we have been having in the audits because of the fee drops and other things. So that you all rest assured. I hope I am able to answer your questions.
Sure, sir. Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Shrikant Kamath, who is an individual investor. Please go ahead.
Hello? Hello, can you listen to me? Hello?
Mr. Shrikant, I would request you to please speak a little louder because your voice is not audible.
Hello, can you listen to me? Hello? Can you listen
Yes, sir.
to me?
Please go ahead with your question.
Okay. Sir, a very good result because you have come EBITDA profit. Congratulations to your team. Hello? My question is, why the current assets are much lesser than the current liability? Current liability is very large because of one-time legacy issue, 165 crores. What is this legacy issues? 165 crores on current liabilities. Will this make a pressure on the balance sheet in the future? Hello?
Yes, sir, you can complete your question.
Yes, current liabilities are much larger than current assets. And in the current liabilities, there is a legacy issue of 165 crores. Will the company have a profit? And in which quarter the company will make a net profit? My two questions.
So, sorry, what was the second question? When the company will?
Go to net profit. Which quarter?
Okay. Anything else, sir?
Yes, that's all my questions.
Okay. Thanks, Shrikant. Thanks for your questions. First of all, thanks for the wishes. Coming to the questions, the current asset versus current liabilities. At this point of time, my major focus in the last one quarter has been to liquidate as many assets as possible and convert them into cash, so that cash can be used for the future growth of the company. And that's how the focus has been on receivables, deposits, and any other asset which has been locked up as of now. And this quarter we have done huge collections, including in October, which obviously has resulted into drop in the current assets. As compared to that, current liabilities stands good. The RailTel liabilities is a major liability out of this, which is swinging this whole current liabilities versus current assets mismatch. And RailTel, we are trying to discuss on the payment plan for the RailTel commitments as of now, along with our new investor, which obviously will share the details in a couple of weeks from now, and that liability will get squared up with the introduction of the investor who is going to fund this previous liabilities closure. In addition to that, we have normal liabilities. We have some overdues which we are reviewing. We have tightened the process of payments to the liabilities because we wanted to review each and every liability before we make payment after this change in the management. So they're all part of the special audits which we are conducting in the transactions of the previous management and the previous vendors. And that's why there's a slowdown in payment to the vendors because of this extra check and balance which we have introduced to to make the payments to the vendors. I think this situation should get corrected with RailTel and with old vendors getting paid. I think quarter three, this situation will come back to normalcy. On the net profit side, my expectation, my target is obviously quarter three, but I'm not sure as of now. I don't want to make any commitments, but quarter four, surely, like I said in my first part of the session, I mentioned that we are planning to have exit PBT positive, which means quarter four is my target. We will see that if we can prepone that by a quarter, but as of now, this is what it looks like.
Okay, thank you, sir. Thank you.
Thank you, Srikanth.
Thank you very much. We would like to remind participants to press star and 1 to ask a question. I repeat, you may press star and 1 to ask a question. Participants may press star and 1 to ask a question. The next question is from the line of Shrikant Kamath, who is an individual investor. Please go ahead.
Sorry, again, I had one more question. What is the current cash balance in your balance sheet, the company? Is it 45 crores?
Shrikant, I don't know from where you got that figure of 45 crore. Is it coming from the balance sheet what we had published?
Yes. Yes.
Okay. So, our current balance put together is almost 50 crore. But I must say that most of this balance, a big chunk of this balance is with the banks as deposit against our facilities for availing the bank guarantees and other deposit which we have to give as a part of our government business. So if you really ask me, liquidity wise, I think we are like say roughly around a 1 month of working capital as of now. We have the cash balances. Rest all is mostly linked to our deposits with the banks as a lien against the bank guarantees and other limits what we avail from the banks.
Sir, one more question I have. Will the company face any problem running debt, paying cash funds in the future?
Yes and no. I'll give a loaded answer here because we have seen like a fluctuating cash requirements versus the fluctuating cash collections as of now. During the month, we are able to fulfill all our liabilities, including regulatory liabilities and everything else. The challenge what we are having at this point of time is the mismatch of collections versus payments on a day-to-day basis. Mainly because of the fact that most of our collections happens in week 3 and week 4, while most of our payments are due in week 1 and week 2, including the employee salaries and rentals and all that. But we have not defaulted on any of our payments. There have been some intermittent delays in some of the payments, some because of the process which I just mentioned that we have introduced for our vendor payments, and some because of this cash flow mismatch by few days. But broadly, and we are not defaulted. I think I'm repeating this state. We have never defaulted on any of the payments. There may be some delays, but there has been zero default in our payments as of now.
One more question. What is the net debt you have now in the company balance sheet? Net debt. Zero debt company? Zero debt.
Yes. So our company is a zero debt company. We don't have, other than small lines in some geographies, we don't have any bank limits as of now. So there's a zero debt company completely. For the next 1 or 2 quarters, my focus is basically to liquidate all investments wherever we can convert them into cash, including our intangible assets, including whatever product businesses we have done the investments in the last 3 years or so. And so basically make the balance light from the assets point of view. Current assets and liabilities I've already mentioned. Focus will continue to be that how do we cut down our DSOs, our receivables levels, and convert them into cash faster than earlier, and continue to settle the current liabilities, which is mainly the vendors' payments. I think quarter 3 we should get stabilized, so current liabilities also get stabilized. So this is the plan as of now for the balance sheet.
Okay, thank you, sir. Thank you. All the best.
Thank you. Thank you, sir.
Thank you very much. The next question is from the line of Anurag Singh, who is an individual investor. Please go ahead.
Hi, am I audible?
Yes, Mr. Anurag. Please go ahead with your question.
So, my first question is the current liability of about 57 crores. Is that primarily because of the royalty project, or does that also include the
Mr. Anurag, may we request you to please speak clearer?
Hello?
Yes, sir. Your line has been unmuted. You may please proceed with your question.
So my first question is the current liabilities of 167 crores. Does that include any component of the legacy issues that have been identified, or it is just related to the railway project and other current liabilities? Second is a connected question. If so, there was some news about some funds being generated or raised for the railway project. Could you just explain on this a little?
RailTel project, coming first to that is, first of all, thanks Anurag for asking the question. On the RailTel project, I will not be able to give more information at this stage because we are still in the process of negotiating our definitive agreement, and more details I'll be able to share only after signing those agreements. But in summary, we are looking at partial stake sale in the RailTel project only, where the investor is going to fund our future liabilities and some of the past liabilities in exchange of certain stake. And that will take care of the whole RailTel project monetization, which we have decided not to pursue further of our own, mainly because this is the non-core business to our structure today. This is not part of IT services. It is more of digital media business. So that was the thought process on RailTel, and we didn't have major experience in managing digital media kind of businesses. So we have got a partner who is more like investor as well as a specialist in digital media space. So that's what we are going to do. So I think in the next few weeks I'll be able to share more details with you. On the current liabilities, I think I've already explained. It's a mix of both the RailTel liabilities what we had for the last almost now 4 quarters, 5 quarters or so, and obviously RailTel has been kept informed as their party to that why we are not paying and what we are working with them on monetizing that contract. Other than that, which I mentioned, the current liability is also on a higher side, mainly because of this extra checks and balances which we have created for the vendor payments as of now, plus the small mismatch of the cash collections versus. So it's a mix of 2-3 items which should get stabilized in this quarter.
Got it. Thank you for your answer. But that doesn't answer my question on the legacy issues at all. So are we saying that we've not accounted for the legacy issues at all in the reports that we published till now?
As of now, whatever legacy issue internally we have been knowing, those have been fully provided for. I'm not expecting any major surprise because of the legacy issues. Our balance sheet, whatever is the provisions and everything else, will take care of whatever exposures might come because of the legacy issues. And some of it, as I think we have disclosed it enough in our March 24 balance sheet also as exceptional items, and some more such smaller items have been taken care in quarter one and quarter two. So as of now, as of 30th September balance sheet, I am not privy to any exposure which we might have more than what we already know as of now.
Got it. Thank you.
Thank you, Anurag.
Thank you very much. The next question is from the line of Kiran, who is an individual investor. Please go ahead.
Hello, can you hear me?
Yes, Mr. Kiran, please go ahead with your question.
First of all, congrats on the EBITDA improvement that we have had. So basically, my question is, in your initial remarks, you mentioned that you don't, look at growing the top line. Is there any particular reason for that?
Okay, so you have any more questions, Kiran, or shall I answer?
Yeah, I think so. Thank you.
Okay. So on the growing top line, like I think I mentioned that this particular year we want to do the full transformation as well as the prioritization of our approach to the go-to-market strategy. We have been working on finalizing what products I want to focus on, what geography I want to focus on, and what kind of team I need to deliver that. And that's why we have taken some time. We have not stopped the growth, like I mentioned earlier. We have added contacts and we have added clients, but we are not aggressively pursuing new clients till we are very clear that which path we want to take. More or less, we are clear. As of now, in the last board meeting, we had discussions about the future roadmap, and it will take us 1 or 2 quarters more to set up teams, to realign ourselves, to become clearer on what we want to do, and we will be ready to get into the next level of growth starting from the next year onwards. Not that we will not grow as of now, but we are not aggressively pursuing growth. And these 2, 3, 4 quarters, we want to use it for the whole transformation, our cost structures, our revenue structures, product and geography priorities, team building up, cleaning up all whatever is left over in the legacy and the forensic issues. We want to clean up everything, and then we move on to the growth trajectory starting from April. That's what the thought process as of now. It may happen earlier than that, and there can be a progress on a daily basis. It's not suddenly going to happen on 1st of April. Every day we'll keep working and keep improving on what we want to do for future.
I have one more question, if I may.
Sure.
So basically, when it comes to the retail project, I'm not sure whether you mentioned, are you giving away the project, or it is just that you are bringing in an investor and a partner who can manage the business and share the revenue?
Yeah. So, like I said, I'll not be able to share more details, but the second statement is true. We are not giving up the business. We continue to be part of the business. But we are getting an investor who is specialized in this area, who has done this kind of business earlier, and also bring cash on the table, helping us in managing the project, obviously with the share in the profits.
Okay. Thank you, sir. You are doing the wonderful job. We hope that the company improves from now. Thank you very much.
Thank you, Kiran.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Manoj Bagadia from Equicorp. Please go ahead.
Hello, can you hear me?
Yes, Mr. Manoj,
Yes,
please proceed with your question.
Yeah. Thanks for the opportunity, sir. And I really appreciate to try to put the company back on the stable path and then the growth in future. My first question is, sir, if you look at all the legacy issues, whatever is forensic and then whatever is there. So as of now, what we have shown in the half-yearly balance sheet, you mentioned that you don't foresee any significant additional liabilities or provisions to be made. But still, I mean, do you foresee that it may come up in future? Maybe you might not see it right now, but do you foresee that there are open ends that can hurt us probably in future? So that's the first thing. To clean the whole thing, I mean, to clean the books and to have a clean slate. So what needs to be done for that? I mean, and in case if there could be potential thing, would you be looking at providing the whole thing and clean it up in FY'25 before you get on a growth path? That's my first question. Second question is about the fundraising. You mentioned about the RailTel project and selling part of the stake to clear the liability with the RailTel. And you also mentioned that it's a non-core business for us. So why are we looking at only selling the partial stake? I mean, are you open to selling the full stake, you get that money and put back into the business, main business, and grow that business and create better value? So are there any thought process for that, or probably stage one you are just looking at clearing of the past liability, get a partner, and then maybe going forward you will look at that step. So if you can just throw some light on the thought process about the RailTel project. And third thing is, you said that you are still mapping out in terms of the transformation, in terms of the go-to-market strategy, in terms of the cost structure, in terms of what products, geography, and people, resources that you have and you need to add. So can you just talk a little bit more about that? And hopefully from 1st April onwards, we should be on track for that. So how long do you think that execution will take to ensure that we are on a stable path, and from there we are looking at annual growth rate? And if you can throw some light on what is the long-term outlook, if you look at next 3 to 5 years, and what is your vision or goal for this company that you would be happy with if you achieve that? Thanks a lot for the opportunity.
Thanks, Manoj. Coming to the first point, legacy issues, like I mentioned earlier to Anurag's questions earlier. In my opinion, I think we have taken care of all the liabilities which may arise because of any legacy issues. There may not be any more surprises. There may be few surprises, small here and there, which obviously we'll take care as a part of the quarter 3, quarter 4. But I'm not expecting any huge surprise to the markets as of now, as far as the legacy issues are concerned. We have already reached a clean slate level. We don't want to overdo provisioning, just for the sake of it, just to have a clean slate. We don't want to do over provisioning. So whatever we could estimate at this stage, we have done enough of that, and that should be sufficient for us to take care of any of those issues. For the future, your question was that what we are doing to ensure that this kind of thing doesn't keep getting added over a period of time, and it's a one-time activity. And so what we have done is we have taken a cutoff of 2021, where anything prior to that we have covered as a part of the legacy issues. And anything after that, we have done a lot of work in terms of going through the past 3 years. We have cleaned up everything as a part of our business. That's not a special legacy audits or forensic there. As a part of our internal checks and balances last 3 years, whatever the assets and liabilities has been created, some of which we have shared as a part of the feature tech, RailTel projects and all that. We have been cleaning that up, and we are trying to monetize as much as possible of those investments, especially things which we felt was non-core, and we don't want to invest energies and resources in that. So legacy plus post-legacy, I think we are good as of now. I think quarter 3 we'll finish all these activities. The final last stretches left in the forensic audits. But we know that what is going to come out of that report, and that's how we have provided for whatever we could. On the RailTel monetization, you are absolutely right. We internally have said it's an on-core business, and we have, we could have exited fully into this rather than partially. But this is a government project where we have, been party to it, and investor also wanted our skin in the game because we have been front-ending that with the RailTel as a customer. We know the history. We are the lead bidders over there, and we had won in our name there. So we couldn't have replaced us with anybody else without going through the re-tendering and other processes, which would have diluted the value of the project. So we had to stay in that project. We had to be active participant, but we needed somebody who can help us in the execution piece, and that's where the investor role comes in. Does that mean that we will not do similar projects like RailTel? If our association with this partner gets stronger and we are able to get more confidence as a separate, this RailTel project is in a separate entity. We might continue similar projects in that entity using our partner. But as of now, we have not thought through after RailTel what in that particular entity. So that's on the RailTel piece. In terms of transformation, yes, I think I've said that quarter 3, quarter 4, most of our work will be over, and we'll be ready for taking 3i to the next level starting from next financial year. This year is more going to be transformation and cleanup year for us. Next, very frankly, like next 3 to 5 years, it's a little difficult for me to put any targets at this stage, because my focus in the last 1 quarter has been to understand 3i and set up my strategies, and the next 2 quarters is going to be more on execution of those strategies. By I think quarter 3 and quarter 4 beginning, I'll be able to fix up my long-term strategic plan with the help of my management team, because as of now, some members of management team, including my CFO, is also missing. So once we have the full management team, once we have done the basic transformation, I think I'll be ready to have a look at it, the long-term strategic plan. And by quarter 3, I think in the quarter 3 investor call, we might see that if we can give you a proper full guidance on the future at that stage. So I'll need some time to come back on this topic.
There's just one question on the transformation part and then getting the right talent. Are you confident that we'll be able to attract right talent, what we need for the future growth? So one is about talent, and second thing is about investments. Do you foresee any significant investment to be made in the business for the future growth? And if it is, then if you can just give the idea what you need, and then is there going to be some cash flow and then some other ways to fund those investments?
So talent is, I think in the IT services space, talent acquisition anyway is a difficult task nowadays, with so much of demand and supply gap as of now, and people preferring on-site assignments as compared to working in India as an offshore assignment. So talent has always been a challenge. Also in the BPO space, where the attrition rates are always higher in the industry, mainly because that's an entry level for the graduates, entry level job, and then they keep moving jobs. We are having challenges, so it's not that we don't have challenges. Getting a right talent is a challenge because of our history, because of the management changes which has happened in the last 6 months or so, because of whatever negative news we have got in the market because of these events, including legacy and forensic audits and a change in management. But I will not say that like we are not getting the talent. We got in this quarter we have closed our CRO position, we have closed our CTO position. We are actively closing our CFO position in the next few weeks. So we are on path. It's not easy, I must say, but with the right attitude and with the right communication and right challenge given to the candidate, there are people who are ready to take these challenges and join us. And that is true all across, not only at CXO's level, but also at the next levels. I'm saying that like it's a question of communication and a management commitment, and the right talent is available in abundance in Indian market. So I'm not having major challenges. Struggling, but not there's no challenge. In terms of investments, I don't think we need any major investment at this stage, whatever I can foresee. I think it's our business is more capital light business, and it's more manpower intensive business. Whether it is the digital services, whether it is BPO services, whether it is infra services, and it doesn't require major investments. So I don't think investment is going to be a bottleneck for our growth. Small investments like offices and infrastructure and all will be required, but I think that can be managed. That's not an issue for us as of now.
Right. I'm really happy to hear that. I mean, although the industry is also facing challenges, and given our position, still you are able to attract talent. So it's the company challenges in addition to the industry challenges. And despite that, you are able to attract the talent. So, I mean, congratulations for that, sir. I mean, it's a Herculean task, actually. And for next 6 months, I think that's the most important thing. And once you put the company on a stable path, then it will be much easier. But as of now, it must be a big challenge for you, actually. And I hope to, and I'll wait for your plan, what you have for next 3 to 5 years, maybe in 1 or 2 quarters, sir. I mean, thanks. Thanks a lot, sir.
Sure. Thank you, Manoj. Thank you.
Thank you very much. Before we take the next question, we would like to remind the participants that you may press star and 1 to ask a question. I repeat, you may press star and 1 to ask a question. The next question is from the line of Sharan, who is an individual investor. Please go ahead. Mr. Sharan, your line has been unmuted. Please proceed with your question.
Yeah, can you hear me now?
Yes, Mr. Sharan, please proceed with your question.
Yeah. First of all, congratulations on showing positive EBITDA. I have a few questions. How will you manage or improve your working capital requirement? Because you said like you have working capital for 1 or 2 months. So how will you manage your working capital requirements? In the same line, do you have any plans to infuse more capital? I know you had said like you don't have, but apart from infusing more capital, are you planning to invite any promoter stake in the company? And my third question is, will we get any cash from the statutory audit that we are going through? Will there be any positive result from the statutory audit where we would have some cash coming in? With regard to the fourth question, it's again the rail, which you have been discussing a lot. So what will be our support in rail? Will we be providing IT-based support, or will we be just sharing the profits and someone else will be doing the main work? My fifth question is, right now the company has kind of turning it around. Company has turned down. And how would you improve the confidence of the investors? Because what I'm seeing is kind of the investors' confidence needs to be more. So do you have any marketing plans to improve the confidence of the investors? And sixth question is, there are many subsidiaries like in Thailand, which needs to be, it is not kind of a question mark on its ongoing concern. So what are the situation of these subsidiaries? Are we planning to shut them down? And my seventh question would be, when will it be made as a full-time CEO? So that's it from my end.
Okay. I couldn't get one question, but I think we'll come to that at the last. Thanks for asking these questions. First question, working capital requirement plus the plan to introduce more capital. As of now, we, like I said, that we have regular working capital for meeting our day-to-day requirements, and we might require a little bit of an investment to be done for the growth which we might require in the next year. We are evaluating various options at this stage as to whether we should come out to the capital market for fundraising for our growth requirements, or whether we should look at some kind of a debt at this stage. We have not finalized our plan, so it's a little early for me to comment on that as of now. But we might need a little bit of investment at this stage based on our requirement, based on our assessment, and we will come back to the market as and when we are ready to discuss or disclose that. But I take your point, and I agree with your point that we might need a little bit of an investment in future. May not be huge, because we are not a capital-intensive industry business segment, but we still might need some to smoothen our working capital as well as the future growth requirements. On the confidence of the investors, I'm not sure that, like say, I somehow don't believe in marketing activities to jump up the share price or to bring more investors. I think I would like to leave that to the investor. My focus has always been in my past career also to focus more on the performance, to deliver numbers, to deliver growth, and meet investors' expectations. Once you do that, automatically, I think market will start recognizing you in few quarters, if not immediately. That's what my style is. And I like to show more performance, and then you evaluate my performance by going to the share markets and helping me increase my price rather than me trying to do anything to bring more investors or bring the prices up. We don't have any promoter, like you know, so we are completely held by the retail investors and some couple of institutional investors, and we have one old largest investor as of now, what we would have seen it. So from that point of view, there is no discussion on increasing investor stake or bringing a promoter there. As of now, there is no discussions around that. On the subsidiaries, yes, there is a plan. So like when I said there is a transformation, I didn't touch upon that topic, but we had huge number of subsidiaries, almost 30 odd subsidiaries, and across the globe, India put together. We are working on a plan to restructure everything, combine, delete, wind down some of those entities, including in India. We are looking for full restructuring. That may not happen immediately because, like you know, that these kind of things are more legal dependent and can take 2 to 3 quarters to get executed. But we already started that process. In couple of geographies, we already started shutting down some companies, government companies. We started merging some of those entities. In India, we have started some talks. So I think the next 2 quarters you will see from our FY'24 balance sheet versus FY'25 annual report, you will see some activity happening on that front on simplifying our org structures. Full-time CEO, I think I'm the wrong person to answer this question. I think the board is the right person. I think they will wait for some performance to be shown before they can take a call on the CEO. When you said full-time, actually I'm full-time only. I'm not part-time. So I'm only acting as of now. So I think I'll leave that question open to the board. I think in some forum or the other, I'll tell my board to make some kind of a statement to the investors that what they want to do with this position. I missed one point on the statutory auditors, so I couldn't get that question. If you can just repeat that part of the question. When you said change in the statutory auditors, will it bring some cash or something like that? I couldn't get that point.
So what I was asking was the outcome of the statutory audit. Will we have any cash coming in, or how will be the outcomes? Are we expecting any cash movement from the statutory audit?
No, I'm not sure. Statutory auditors. Do you mean forensic audit?
Yes, forensic audit. Yes.
Okay. That was a confusion because I think so. Forensic audit, I'm not sure as of now. I think there are a couple of areas where we are raising some dispute on the past transactions. Whether we'll be able to recover some money out of that, I'm not too sure as of now. I think it is too early to comment on that piece because we are finishing the last leg of our investigations. And the concerned people, even the past management and past management, are being talked to for some certain details, and there is dialogues happening on that to get into some of the transactions more deeper. Whether it will result into a recovery and whether it's result into some cash coming in, I think it's very early at this stage to comment on that.
Okay. And with regard to Railtel, will you be playing the IT support, or how would that sort of relationship will be with Railtel? Or will it be just give the venture to them and some X party will be handling it?
No, so the execution part of the Railtel project, we are not going to give up everything. So it's not about giving the full management. So it is a joint activity which will be owned by both the parties, where we will bring our expertise in terms of, because it has a lot of digital components in that project. So we will still be part of that whole execution team, where we will be managing the digital platforms and digital applications and everything else, including security, while the other partner brings more of the business experience in terms of digital media. So it's a combination of the skill set of both the partners. So it is not that we'll play dominant player over there and they will play active role. So both parties will play equal role and with reaping the benefits in a defined share.
Great. So that's my question from my end. I think all the best to the team, and we are hoping TI will do a great job.
Sure. Thanks, sir.
Thank you very much. We will take that as the last question. I now hand the conference over to the management for closing comments.
Yeah. I think quite a good interaction. I think this has been my first interaction with this community, and I want to reassure everybody that investor has always been the topmost stakeholder for me. I think everybody else is a player in the game, like your board and management and everybody else. I think for me, the people who have put their money and trust into the company has always been the topmost priority to deliver performance. And I want to assure everybody that we are trying to do our best to bring back this company to its glory days. Thank you everybody for giving time and asking questions. I hope I was able to answer or at least clarify some of the doubts which you might have. And we'll keep interacting, and thank you again, once again.
Thank you very much. On behalf of 3i Infotech Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.